moved into the green zone. However, we saw some profit taking at the last half an hour or so, which pulled the index lower. Now on a days basis, the index has ended lower. In fact, Nifty is down about 0.24% or about 46 points today, and it closed above the 19,600 mark.
So the crucial support level of 19,500, it scaled that back.
I mean, as from what I am reading, 19,500 is looking as a crucial support. The index also bounced back from that level. So I think that will be a key level to track going forward, because the index has time and again taken support around that 19,500 sort of levels. So I think going forward, that will be a key level for us to track. But yeah, the index did witness a good bit of rebound. However, on a day's basis, it ended lower, and Nifty as a result is lower for the second consecutive day. Now, Sensex was also down about 250 points. It closed above the 65,629 mark. Now, broader markets, Shweta, on the other hand, were largely mixed. The small cap index ended marginally higher, up about 0.15%, whereas Nifty mid cap 100 ended about 0.9% lower. Now, among sectors, Nifty Bank also saw some bit of a rebound. However, it moved pretty much in trajectory with Nifty and saw some profit taking near the fag end of the session. Now, Nifty Bank, Shweta, has closed below the 44,000 mark. Now, that will be a major pain point for the investors. It has even closed below the 43,800 sort of levels, which was seen as a make or break level for the index. So perhaps there could be some weakness going ahead, since we are expecting more Q2 results to trickle in over the next week or so, especially from the banking and the NBFC space. Auto sector, Shweta, provided some support. The auto Nifty auto pack was ahead about 0.5% in today's trade. So the results are expected to come. At least the demand is expected to pick up, and commentary will also be eyed. Now, Bajaj Auto, if you remember, came out with a good set of numbers, healthy jump in profitability. So in light of that, two-wheeler and two-wheeler space is expected to do well. Volumes were also not as bad as the street was expecting. FMCG also provided support, Shweta. Now, FMCG pack has pretty much kick-started its earnings season. We have seen the results of Nestle India. We'll talk about that later, of course. And the index saw some sort of a pullback from lower levels and ended about 1.14% higher in today's trade. On the other side, the metal pack saw some bit of a profit taking. It was down about 0.9%. Pharma space also witnessed some correction. It was down about 0.38%. IT continues to be a laggard. It was down about 0.21%. And Realty, which is actually near its 16-year highs, also saw some profit taking at higher levels and was down about 0.35% in today's trade.
All right, that is as far as sectors broadly is concerned. Since you touched on results, and FMCG pack has started declaring results for second quarter. Nestle results were quite positive, 37% year-on-year jump in profit. That's right,
Shweta. Nestle was actually expected to post a better set of numbers compared to other consumer staples. Now, as we know, the businesses of these FMCG companies vary a lot. So as far as Nestle's expectations go, the results are pretty much in line with what the street was expecting. Now, there is a beat on the profitability front. However, revenue growth was slightly below what the street had hoped for. Now, revenue came in at about 9.5% higher. It stood at about 5,036.8 crore in the quarter gone by versus about 4,601 crore in the year ago period. Net profit jumped by 37.3% to 908 crores versus 861 sort of crores. We were expecting, at least the street was expecting profit to jump about 20%. So there is a clear beat over there. Margins also expanded quite significantly by about 220 basis points, coming in at 24.3% in the previous quarter versus 22.1% in the year ago period. We had expected a jump of about 150 to 200 basis points as far as the Nestle results go. Now, of course, we'll also be closely eyeing the commentary that will start coming in probably, in the next couple of hours. Now, key monitorables on that front will be the recovery that, the trade channels are expected to post, also the impact on demand both from El Nino conditions and what the management is expecting going into the festive season, going into that wedding season. Rural demand, Shweta, will also be keenly eyed because that has been a pain point for FMCG and especially consumer staples like Nestle, like HUL. New product pipeline, demand trends as far as packaged goods are concerned will also be keenly eyed by the streets. Now, along with its results, Nestle has also announced a stock split in the ratio of 1:10, which essentially means for every 1 share that you owned previously, you will have 10 shares after the stock split. Now, the date will be intimated by the company on a later day. So, we don't know what the, when the results will be, when the stock split will actually happen. But it also provided some sort of a boost to the stock as it ended. The Nestle India stock ended about 3.5% in today's trade. Now, first, I think we should also touch on the benefits of the stock split.
Absolutely. A stock split, what does it really mean? I mean, I think we were discussing this right before we started with the show. What does the stock split mean for retail, participants? Does this mean there is a better buying possibility now, given that the stock will no more be priced at over 20,000 rupee for an average person?
Exactly, Shweta, you got it on point. The stock is at currently around 23,000 sort of a levels. Now, such a high price tag poses a barrier for retail investors, because retail investors, as we know, usually are small ticket investors. Now, if you are picking up 1 share for 23,000, your overall corpus, you are not left with much money to put elsewhere. So, this stock split will definitely open the doors for retail investors. As I said, the stock split is in the ratio of about 1:10. So currently the stock, I think, is around hovering around close around 23,000 sort of levels. After the split, it will be, I mean, as if we extrapolate today's price, it will be about 2,300 or so.
Okay, 1:10 split.
Yes. Now this will also help improve the profitability, improve the liquidity in the stock, as more retail participants will be able to buy into that Nestle India story. Also for the company, it will diversify their portfolio base as far as the shareholder base is concerned. So all in all, good news for the company, because it will have a better diversified shareholder portfolio. Good news for the retail investors, as they will be able to participate in the run up that we have seen in Nestle stock, which in fact, if we look at the Nestle India share price, Shweta, in today's session, it was up about 3.5%. In 6 months, the stock has given returns of about 17%, and in the last 1 year, it has significantly outperformed the Nifty FMCG pack. Nifty FMCG pack on a year-to-date basis is up about 11 to 12% or so, whereas Nestle India is up about 22 to 23%.
Okay.
So all in all, numbers look good, and the stock split news definitely impressed the street.
All right, it is impressing the streets as far as Nestle is concerned, but HUL also, results just trickled in about a couple of minutes ago. How are the numbers looking like?
Numbers, Shweta, I mean, as far as the
to begin with,
go,
are the estimates, are the real numbers beating estimates? I see profit is up, net profit is up about 3.86%, revenue up at 3.53%, margin is up approximately 130 basis points. How are you reading these numbers, Suyash? So
revenue, Shweta, I think has missed the street's expectations. Marginally, the revenue is up about I think as you said, 3.53% on a year-on-year basis. Revenue figure stood at about 15,027 crores in the September quarter versus Q2 of FY23. In the year ago period, it was up about 14,504.
So you're saying these numbers are not in line with street estimates? They were
revenue
expecting
figures
more?
Are slightly lower than what the street was expecting, but profitability, on the profitability front, HUL has done fairly well. Now, I think from at least the street's expectations that we had gathered this morning, the profitability figure has come in about 3 to 3.5% higher than, actually about 5% higher than what we were expecting. Also, there is a beat in the margins front. Margins we had pegged at around I think 250 basis points higher for HUL. From what I can see, the results, at least we had pegged about 300 basis point jump. It has come about 370 basis point, 130 basis points higher from our expectations. So I think there is a beat on the
So
margins front as well.
Right, not
now,
meeting street expectations.
yes,
there.
now margins were expected to get squeezed because demand is lagging. That's the reality that these FMCG companies are facing, and rural demand has not really picked up. To bring back that demand, especially ahead of this festive season, we have seen that these companies had spent a lot of money in the advertisements. So this was expected to eat away from their margins. But from what I can read, I think the margins look fairly healthy. Okay. On a year-on-year basis.
All right. Let's quickly also get in Vijay Bhambwani, author, CEO of BSPL India, joining us here on the show. Vijay, thank you very much for taking time out. I want to first begin by asking, in line with what we were discussing as far as rural demand is concerned, FMCG companies, two major giants, Nestle, HUL, declaring their numbers. What is the commentary that you're picking up, the chatter that you're picking up on streets? Is the demand back? Is the rural economy picking up?
Well, the rural economy is robust. As a matter of fact, since the last few years, what I have noticed is there is saturation in the urban population. It is the rural segment that is, relatively speaking, overall pushing sales growth, bringing up the rear, as you may call it. But this has been somewhat of a challenging year. Rainfall has been errant. Inflation has been somewhat higher. Let's not forget crude oil, natural gas, both have been impacted by geopolitical circumstances. And going forward, I think we need to wait for the inflation to kind of peak out and come down before demand can get even more robust. And I think FMCG should be a good place to hide if the markets are witnessing some kind of nervousness here.
Now, sir, I think as far as the markets go, we saw a good bit of rebound. Now, the markets had taken support at around, as far as Nifty goes, at around 19,500 sort of levels, and we saw about 100 basis points uptick in Nifty. Now, I mean, we are looking at the other emerging markets also, and they corrected quite sharply today, whereas Indian markets ended on a rather flattish note. So, in the emerging market basket, do you expect India to be an outperformer, considering that there is a risk of sentiment in the global equities?
Yes, I think so, Suyash. I think India will continue to remain a relative outperformer. But let me clarify my definition of a relative outperformer. So a relative outperformer is a market that falls less during a down phase as compared to its peers, and rises more during an up phase as compared to its peers. To that extent, yes. So today, you're a quarter of a percentage point down where the Nifty is concerned. The Bank Nifty is down a little under 1/3%. If the other markets have fallen, say, 0.75% or 1%, we have relatively outperformed. So yes, to that extent, India does have a definitive advantage over its peers.
All right, and since conversations continue to be around what's happening globally, we also want to briefly touch on crude. Remember, the war between Israel and Hamas and potential of additional supply from Venezuela has triggered uncertainty in the global oil markets, after nearly, in fact, a havoc that was caused by Russia-Ukraine war last year. Now, while the conflict between Israel and Hamas, or the Israel war, has not had a similar sort of price surge or impact as opposed to what was happening in Russia-Ukraine, concerns continue to loom that Middle Eastern war and Middle East, that accounts for 1/3 of the global oil supplies, could further hamper if Middle East jumps into fray. So Yash, from what we are picking up, there is a constant upward movement, downward movement. The volatility continues, but the volatility hasn't really surprised a lot of people. Countries have factored that volatility in, and as far as it doesn't cross the $100 barrel mark, all is well. You don't have to worry.
In a global context, maybe $100 a barrel mark, but since we are net importers, I think the comfort really lies around the $95 barrel mark. Now, I was reading a report.
And it wasn't even touching, it's not touching that.
It has actually come down from, yes. After the war, we have not seen $95 sort of levels, but there are other factors also at play here, Shweta. Now, the demand from China which is one of the largest importers. I think it's the largest importer when it comes to crude. is also being keenly eyed by the street. Now, Q3 GDP data which came out yesterday from China was ahead of estimates. So that has also, added to that rally in crude. However, I was just looking at the crude prices before walking in the studio. I think it's currently hovering around that $89 to $90 barrel mark. So we have seen a slight bit of a correction since yesterday's spike. Now, apart from the Israel war demand from China, then we have to also look at the production cuts that the OPEC is imposing. Saudi Arabia, which is, which has imposed cuts of about 1 million barrels a day, and Russia, which has imposed a cut of about 300,000 barrels a day. If there comes a time, when they decide to raise a barrel, it will be raise a cut. It will be a big dampener for the market.
Okay.
And also,
since we have Vijay, and Vijay is one of the formidable figures when it comes to crude. Vijay, what are you making of the existing supply cuts by OPEC countries as well as Russia at 1.3 million barrels a day? Are these supply cuts likely to further go ahead into 2024? We know that they end by the end of 2023, which is December of 2023. If they go further into January of 2024, what sort of impact will they have on crude oil prices?
Shweta, I have somewhat of a contrarian view out here. I think crude oil markets are about geopolitics, politics, terrorism, military, some demand supply, speculative premium, financial premium. So I think there's a whole lot of bluffing going on out here. Look at the OPEC countries. They have either crude oil and natural gas, which you can classify as fossil fuels, or they have sand. Are they going to sell sand if they stop selling crude oil and natural gas? They can't. Do they need money? Yes, after COVID, everybody needs money.
Okay.
So what else can they sell? So even Putin, how is he going to fund his war against Ukraine? He's going to sell crude oil and natural gas. So they can cut output and create an artificial shortage, but they're not creating a huge spike in demand. That's not happening. Buyers are not banging on their doors asking for delivery at whatever prices they want to offer. Alternative supply is coming in. New kids on the block. Guyana stepping up its supply. Venezuela stepping up its supply. Iran selling crude oil on the stealth without country flag marking on their oil tankers, switching off their transponders and delivering oil in the high seas. So supply is definitely there. And like I told you last time in my last appearance, there is an alternate supply chain off the books, off the records in the global crude oil business. And that is flush with oil. I think you've already heard statements from Putin and Mohammed bin Salman, Prince Mohammed bin Salman, saying that we'll open the taps if it is required. And Saudi Arabia is sitting on 3 million barrels of oil per day as spare capacity. If they need money, they'll open the taps.
Now, Vijay, I mean, as far as Russia goes, I understand they would want to keep that prices elevated to, build that war chest to fund the war on Ukraine. But at what point will Saudi, get uncomfortable? Because, of course, they want the prices to get higher. But, the demand is only started to pick up, especially from China, as we have seen in the, the GDP numbers that have come in. So, at what point do you think that, perhaps we'll see some sort of an intervention from Saudi?
So, yes, a few minutes ago, you were mentioning a threshold of $95 a barrel. And let me clarify, I refer to WTI, not Brent.
Okay.
Because we hardly buy Brent, right? So, WTI tends to be trading at a slight discount to Brent, maybe $3 a little bit give and take. I think Saudis know and they understand one thing through empirical evidence, they're old hands in the game, that there is something called demand destruction and alternate fuels that come into play if the price of fossil fuels go high. Now, if at all, you're going to rig up the prices by choking off supply and you're going to drive your customers away to alternate suppliers and alternate markets, that's acting your own foot. The shale oil business suddenly starts to become more viable. Wind and solar energy becomes a lot more viable. The oil sands of Alberta in Canada become a lot more viable. So the Saudis know that. I don't think they will allow crude oil to go at the 3-digit mark. I'm talking of WTI again. If it goes to a 3-digit mark, it will be more of a photo opportunity. And I say what I said last time. Given a 3-digit mark, I'll be fairly happy to short crude oil. Of course, I'm a patient man. I would wait for a couple of
Okay.
weeks or months, even if I have to. And I think this is a game of chicken going on in the international fossil fuels market. Unless Iran comes into the picture or dirty weapons like nuclear and chemical weapons are involved in this war, I don't see crude oil going and staying above the 3-digit mark for long.
Okay, so from what I understand, it's a very tricky situation for Middle East. They cannot create demand, at the same time they cannot continue to cut production. What are your expectations after what you're seeing in West Asia? Because from the Middle East's involvement, a passive involvement at this point in time, hopefully will not turn into active involvement. How is that likely to impact crude oil prices? I'm not asking you to be a doomsayer or a doomsday predictor, but from the existing geopolitical scenarios, a flurry of leaders from the British Prime Minister to the US President going to Israel, ensuring that the situation de-escalates. Are you hoping that there would not be a supply chain disruption? What are you making of how and where we stand geopolitically?
Shweta, not only am I hoping, but I'm also fairly optimistic about what's happening in the Middle East today. Look at how the Israelis are trying to make friends with the Saudis and vice versa. Look at how Israelis have got diplomatic relations back in place with the UAE and Oman. Last time I mentioned Saudi Prime Minister Netanyahu having a cup of tea at the palace of Sultan Qaboos, late Sultan Qaboos. Now they want peace. They understand that going forward, fossil fuels are not going to be the only game in town where revenues are concerned. Look at Saudi's Vision 2030, right? A big, gigantic city in the desert in Saudi Arabia and 120-kilometer long stretch where you're going to have modern facilities, you're going to have reforms where women are driving, etc., etc. This can only come about during times of peace and foreign investment. So I think most of the players in the Middle East today want peace. They don't want escalation of war. Not only am I hopeful, but I'm also optimistic this time around.
Now, Vijay, I think WTI currently is hovering around that $87 barrel mark. At what levels, as far as WTI goes, will you be concerned in regards to domestic markets, since we are net importers of oil?
I completely agree with your figure of 95, give or take a dollar.
So for WTI, 95?
So the support level would be at 95 a dollar.
So I mean, to extrapolate, I think Brent around at 97, 99, 2 to $3 per dollar that it's trading at a premium.
Yes, Suresh, if I'm not mistaken, you said at what level would I start feeling worried? I'm talking of 95 WTI, I would start getting worried if it stays there for too long.
All right, 95 for WTI. This is where, and if it stays there for too long, this is what will get Vijay Bhambwani worried as far as crude prices is concerned. We're not there yet. In fact, we're far away from there. So nothing to worry is what I'm reading of the situation.
9%
right.
Away from that $95.
And hopefully we'll continue to be away from that number. But Vijay Bhambwani, thank you very much, sir. Always a pleasure having you here and listening to you on News9. We're going to move on for now. India is witnessing a worrying trend, whether when it comes to financial frauds or a spurt in financial and Aadhaar related frauds. In fact, recently a new scam is being reported by common people where cyber criminals are using fault in the newly launched Adhaar enabled payment system, wherein in the new scam the victim won't even get a prompt such as an OTP or a link or a mail. Criminals are stealing money by accessing data and biometric details registered for Aadhaar cards. Scammers get hold of the fingerprints and the details, getting the name of the bank and account details of the victim from wherever they leave the fingerprint, and people targeted through the Aadhaar payment system are not even getting an SMS when the money is debited from their bank account. This is the latest modus operandi as far as Aadhaar enabled payment system and a scam therein is concerned. Let's quickly get in Kanish Gaur, CEO of India Future Foundation. Joining us on the show, also with us, is Pawan Duggal, Senior Cyber Expert. I want to come to you first, Kanish. Thank you for being here. Thank you for joining us here on News 9. What are you making of the Aadhaar-enabled payment system scam? What is the scam? How does it operate? And why should we worry?
Thanks, Shweta, for having me here. See, the Aadhaar ecosystem comprises of AUA, KUA, and ASA, which typically are ecosystem partners for Aadhaar, which store the biometric. They allow the handshaking to be happened. Now, what is happening is a lot of end users, when they use Aadhaar for eKYC, they do not enable multi-factor authentication. So they do not allow multi-factor authentication to happen. So they are making themselves vulnerable. So the biggest issue is that people are not aware about having multi-factor authentication or cybersecurity basics. That's one concern. Second, a lot of times people sell their biometric information for certain amount of money. So people will sell their biometric information and give it for 500, 300 rupees. The third is cyber criminals. They are capturing all of this information from third parties who are working with these AUA, KUA, and ASAs, typically who are involved in lending. So any third-party lending provider would typically sell away with this information. So the biggest issue is the supply chain security of the Aadhaar ecosystem. We'll have to build out partners who are taking care of security and are not selling out data of Aadhaar ecosystem. It is one of the largest databases in this country today. If there are ecosystem partners who are now using it for lending or using it for financial literacy or financial need of common citizens, their onboarding, their KYC, the way they drive this has to be really enabled to ensure that they are not selling out the Indian consumers. So that's something. So supply chain security is the clear miss out, and government will also have to enforce strong penalties, strong regulations. If any organization is found doing this, then they could be penalized, be put behind bars. So that's one of the key things. They have the Aadhaar Act. Now, UIDAI need to use the Aadhaar Act today to ensure if any organization which is part of the Aadhaar ecosystem is found using some of these aspects, they could be penalized or put behind bars. So that's something which is there. So using the Aadhaar Act is one of the key partners, and the existing ecosystem which is there of third parties which are onboarded for enabling handshaking to happen, that needs to be securely audited multiple times to ensure they have their people who are not leaking this information, because a lot of times insiders in banks, in fintechs, they sell all of this information outside. So ensuring that there is no insider fraud involved, that's something which is the need of the hour.
All right. Pawan Duggal also joining us on the show. Pawan, thank you for taking time out. In one line, is Aadhaar safe? I mean, this raises the questions of not just related to Aadhaar payment system, but a lot of people who have been constantly asking questions of the government with respect to how safe is Aadhaar as a system? Is UIDAI able to protect people and their information and their biometrics? To that question, after these scams are being reported day after day, would you still say Aadhaar is safe?
I may put it in this way, that the Aadhaar Central Identities Data Repository may be safe where our biometrics is located, but the Aadhaar ecosystem is a leaking, unsafe, insecure leaking system. And ever since everything is getting connected to Aadhaar, whether it's income tax, whether it's bank account, whether it's other details, its ecosystem that's come across around Aadhaar is completely unsafe for the very simple reason that we have not stipulated the minimum cyber security parameters that are essential for the purposes of safeguarding the Aadhaar ecosystem. And much that the amendments to talk of the Aadhaar ecosystem in 2019 law, we still not have been able to make it secure. So it's much more better for people not to use Aadhaar wherever possible in the Aadhaar ecosystem. Otherwise, in case if their Aadhaar tends to get compromised, there is a problem. They cannot even report to the police because any kind of an Aadhaar misuse only has to be reportable by the Unique Identification Authority of India, which is the UIDAI and no one else. So also you don't have effective remedies once your Aadhaar stands compromised or your biometrics stands compromised. So I think till such time India doesn't come up with dedicated national cybersecurity law. Till such time, the cybersecurity parameters for all stakeholders in the Aadhaar ecosystem are not effectively defined and effectively enforced and implemented, I think this system will continue to be a leaking system. And recently we had this recent case where even in the film festival website, we saw some leakages happening. So I think the thumb rule is, let's learn to be very, very safe and secure. Let's learn to use our Aadhaar with caution. Let's not hand up printouts of our Aadhaar copies to cellular operators.
Okay, so what do we, you know, Mr. Duggal, one of the questions that a lot of consumers, in fact, are often faced with, every time we are asked for an Aadhaar copy, let's say when we are making a hotel booking, when we are making a purchase, when we are making a travel booking, should we or should we not share our Aadhaar number?
We should, as a principle, never share our Aadhaar number. For the very simple reason that if your Aadhaar number is going to be compromised, you have no legal remedies under the available law, whether it's the Aadhaar Act 2016 or whether it's the Aadhaar Amendment Act 2019. Please go ahead and share your other identity details, maybe your driving license, maybe your voter ID, maybe your passport. They are much more safer than your Aadhaar, because Aadhaar is the only unique identity which is connected with your biometrics. And if that's going to be misused, you'll have no effective remedy. So please, let's remember, the Supreme Court of India has categorically said that Aadhaar is not mandatory. The government cannot force people to give up to their Aadhaar. So wherever possible, start using other means and other documentation of identity. And please don't land up giving your Aadhaars to any untoward persons.
All right, Pawan Duggal, thank you very much, sir, for taking time out, for joining us here on News9. Kanish, coming back to you, would you agree with that assessment that there are leakages not just in the Aadhaar ecosystem, but also not enough remedy in the law if at all your personal data is compromised? So let's say my Aadhaar details are made available in the public and they're sold and they're compromised and the money is debited from my system. I do not have enough legal remedy?
See, the laws in the IT space are primarily weak right now. So tracking that, it takes a lot of time. The laws are there. The laws are there definitely, but primarily looking at how do you safeguard, get behind us financial criminal. That's one of the issues. So today, getting a cyber fraud investigated from police, because there are so many frauds which are happening, it's really difficult to ensure that there are people who are tracking this case. So the best way is to primarily safeguard yourself and ensure that you enable multi-factor authentication, share minimum of your personal identifiable information. Those are things which are the need of the hour. But otherwise, you will have to go to the courts, put pressure on the police to investigate. The amount of cyber fraud which gets reported in this country today is increasing. Every day there are, at least in every tier 1 city, 5,000 to 10,000 cyber complaints. So for the police to investigate each of them, it becomes a really big concern. And a lot of these cyber criminals are operating from another state. So another key issue which comes is that how do you track a cyber criminal who is working from another state and you are basically getting duped in a different state? So two state police need to coordinate and work together, but it becomes too much of a task. A lot of times when the police from one state lands in another state, they find the cyber criminals have actually, moved away and are no more there, because they get that information much well ahead in advance in terms of, that there is the police is trying to tail them or they're trying to come after them. So it's become a more a national issue as, it's impacting every citizen in this country. So what is required today is more like a central agency, like a Central Bureau of Investigation, Enforcement Directorate, which has the power to draw enforcement and track cyber criminals and not just become the activity of state police. And they could typically look at conducting raids for cyber actors who are causing tremendous amount of harm, not only to citizens, but also to financial systems of this country, impacting the GDP of the country.
All right. And in fact, we were just playing up those pointer graphics on our screen, those pointers as to how and what you should do. Let's play them again for the benefit of all those viewers tuning in right now. If you want to secure yourself, on your screens are the points the steps that you can take. Download the Aadhaar app. register your Aadhaar number. Do those steps in order to ensure that you are in control of your Aadhaar details. You'll receive an OTP. Thereafter, you set a 4-digit digital PIN. And after doing that, you can access your Aadhaar profile. You can lock and unlock your biometrics. This will give you access to locking and unlocking your biometrics at your own disposal. You can confirm lock, you can unlock, you can once again enter 4-digit PIN. This will in fact safeguard you and your biometric details, and nobody else on the outside will be able to tamper with them. Before I let you go, Kanishk, one of the crucial key important things that we often talk about Aadhaar is how much and to what extent can we control biometrics. From what we just read, the steps that an individual can take to lock their biometrics, is this full and final? If we are to do that, will it still will we still be vulnerable to our biometrics being abused and being shared and being tampered with? What can a common man do to protect themselves?
So one thing the common man can do is it can use masked Aadhaar, where somebody is trying to ask you whether the information is there. Like Mr. Duggal said, do not reveal the exact details of your Aadhaar. Show that you have an Aadhaar card. So don't allow people to take copies, generate unnecessary copies, or give away your Aadhaar card to any third person, right? That's typically there, right? Then if you're somebody is trying to do a eKYC, enable multi-factor authentication so that you have a OTP or a PIN or a KYC mechanism where you can verify. A lot of people do not enable multi-factor authentication. They just allow their Aadhaar copies to be distributed freely, right? That's one of the key things which could be there. And masking the Aadhaar is there. One key thing is the digital locker app today has Aadhaar interface built in. So you could typically use the digital locker app and show a digital Aadhaar instead of giving a physical copy of the Aadhaar card to multiple.
All right. Those, of course, are crucial, steps that you can take in order to protect your details. Thank you very much for taking time out. Thank you for joining us here on News9. Kanishk, appreciate your time.
Welcome.
Moving on now, tax evasion, GST evasion, in fact, is increasingly in the news every other day. In the latest, GST intelligence teams have reportedly searched Indian offices of foreign carriers for alleged tax evasion. As per various media reports, Directorate General of GST Intelligence, DGGI officials have conducted search operations at Etihad, Emirates, Saudi Airlines, Qatar Airways, Air Arabia, Omar Air, Kuwait Airways, among the 7 Middle Eastern airlines it has conducted raids on. Now, DGGI has alleged that tax evasions by these carriers is happening on account of import of services from head office by Indian branch offices. Not just airlines, many companies have reported GST notices in the past few days. To quote a few, homegrown fast consumer goods major Dabur India got a notice to pay goods and services tax to the tune of 321 crore rupees, along with interest and penalty for GST shortfall and non-payment. Gaming company Delta Corp was also notified of a substantial tax liability and a cumulative tax shortfall amounting to 23,000 crore rupees. Ritesh Kanodia joining us here on the show at this point in time. Ritesh, thank you very much for taking time out, sir. What's happening here? I mean, not just the 7 airlines that we got to know of, whose premises are currently being searched. Dabur, Delta Corp and a lot more others getting GST notices day after day. Are they not in compliant? Do they not know what laws are? Or is there a gap in understanding?
Currently, what is happening is that department is going on through this process of audit and assessments, for which there is a last date of September for 17-18, and the department has very recently become active on such audit and assessments. So when such kind of audit and assessments happen, you talk about any tax laws, right? There are GST and specifically being a new law, there would be issues of interpretation. There would be issues where there would be a lack of clarity in terms of applicability of a tax. So you mentioned Delta Air, right? For the gaming companies as an example, where
Delta Corp,
demand of Delta Corp, where 55,000 crores of demand have been raised. Now, this is an issue of valuation of whether the GST should first be applicable at all, and B, if applicable, at what value. So the authorities have one view and the gaming companies have another view to say that what I earn is, merely the difference and not the entire bet value. So it's a issue of interpretation where the GST Council has formulated a value. I don't think so. This is in all cases about tax evasion, but I think it is more to do with whether the particular provision of law applies in a particular manner or not. So let's come to this entire discussion on the airline notices that is being received and whether they are liable to tax under import of services or not. So there is a particular provision under the GST law to say that transactions between related parties are liable even if without consideration. Now here we are talking about a structure where there is a branch which is located in India.
Okay.
The branch is supporting the head office in certain aspects, right? Now the question is whether the branch is a separate establishment or not, liable under reverse charge, whether the services are being availed by the branch from the head office or is the head office consuming those services, and therefore there is no question of any reverse charge. So there are a lot of facets which needs to be dealt with before you come to a conclusion that whether there is any liability to GST or not. Now, typically what happens in such scenarios is that the branch would be remitting some money outside of India, which makes the authorities to come to a conclusion that this is reverse charge, but it may not necessarily be a reverse charge evasion. So we'll have to see and analyze whether and see and wait and see as to how this evolves. What is the factual information that the airlines submit, and ultimately, what is the allegation and what is the actual position in law around this. So
okay.
To answer your question, I don't think so. This is all to do with tax evasion or a lack of understanding of law. I think this is more to do with, interpretation of the tax authorities versus interpretation of a taxpayer.
Okay, but as a result of which, you have a, industry like the gaming industry for that matter, which is saying that this is a death knell for us. The increased in the amount of revenue notices to the tune which is double or triple the market capitalization of some of these gaming companies, which essentially means that they cannot pay up. They simply don't have enough revenues. In which case scenario, would it not be prudent for, both the taxpayer and the taxing authority to perhaps come to a conclusion before giving out notices, handing them out to people and to companies in a manner which appears to be handing out, doling out toffees and cakes like sweets. We keep hearing about these notices every day.
No, you're absolutely right. And what is gaming is a very peculiar scenario, and unfortunately the way it has moved is that the gaming company went to the authorities to get a clarity on the position of whether the tax is applicable or not. It had dual consequences. So one is that it was confirmed that there is a tax demand and show cause notices are being issued. The government went ahead and even amended the law to say that I will now tax you on the full value. So while you're mentioning that ideally it should have been a dialogue and a resolution, the dialogue has actually resulted in a consequence. Where, at least going forward, while there is a position of challenge, they can go and challenge the new provisions as well. Let's say going forward, they will collect the GST amount and comply with the law. That's futuristic. The problem which is now happening is for the past, when the law was not clear at all, right? And there was an issue in terms of what is the value of taxability. In that situation, at least the government should come out with some relief to say that, okay, we understand that there was a lack of clarity and therefore we are granting you this. That is not happening. In fact, the government is making statements to say that we were always of the belief that the amended provisions are a matter of clarification and not a matter of change in position in law. That is where the stickiness is, and you would see all these gaming companies have gone to the High Court,
right,
to say that we do not agree to this tax. Now, but as a consequence, you've already seen, right? Some of these gaming companies have crashed on the stock market immediately. That's the public reaction. So it does have a very critical...
What's the middle way, Ritesh? If I were to ask you, what is the middle path in all of this? You have an overactive GST authority, which is not giving a leeway to some of these companies. Some of these companies say, we were not clear about the existing rules and regulation. Government says, no, but these were always the rules and regulations. Gaming companies were always supposed to pay 28% tax. In absence of a clarity, what is the middle way?
So if you... the middle way is clearly what happened, let's say, with the ice cream companies, where there was a dispute on, whether there is a 18% GST on ice cream or whether there is a 5%. And what the government said is fine, the 18% is on a going forward basis. But for the past, I agree to a 5%.
Okay.
I think that is the crux.
So no retrospective implementation, essentially.
No retrospective implementation, because that was never the law. And even if for a moment there was some interpretation issue, why can't the government be proactive to say that, okay, I understand in the past there was some lack of clarity, there were some disputes. It's not that the matter was clear. The matter was clear. There was no need to go to the GST Council, or there was no need to make any amendments, right? Why did the government went ahead and made any amendments?
Right. Absolutely. Ritesh, as much as I would love to hear further to that, we've run out of time. Thank you so much, sir, for taking time out. Really good to have you on the show. Thank you so much for speaking to News9.
Thank you.
And with that, it's a wrap on the show. Thank you for watching.